today on the Living Young and Free show, we're going to be talking to you about credit scores.
Hi guys, it's Mallory here for Young and Free Maine, and this month's Living Young and Free show is all about your credit score, what it is, how it's calculated, and how it can affect you. Make sure to check out this episode of the Living Young and Free show to find out how your credit score can benefit you.
What's up, everybody? It's your girl, Ebeth, from Young and Free Michigan and Michigan First Credit Union. Credit scores. What are those? What are those? A credit score is a number that shows your financial reputation. Why should I care, Ebeth? Well, credit scores are really important. Your credit score is pulled when you're applying for a car loan, school loan, credit cards or personal loans, a mortgage, or even an apartment complex. Your credit score really matters.
If you're new to the whole idea of a credit score, you might be wondering, how is it calculated? Well, it's easy. Your credit score can be broken up into 5 categories. The first category is your payment history, which makes up 35% of the score. If you make payments on time, you are in good shape. Second is your capacity, which shows how much of your available credit is being used, and this makes up 30% of your score. If you're close to maxing out the credit limit on your cards or other lines of credit, it's not good even if you make your payments on time. Number 3 is length of credit, which makes up 15% of your score. The longer you've been using credit, the clearer the snapshot of your credit habits. Number 4 is new credit, which makes up 10% of your score. If you open lots of credit cards or loans in a short time, you look risky. And lastly is the types of credit you use, which makes up another 10% of your score. This can be a mix of credit from loans to credit cards and other lines of credit.
Score is a 3-digit number calculated from your data-rich credit report and is one factor used by lenders to determine your creditworthiness for mortgages, loans, or credit cards. Your score can affect whether you are approved or as well as what your interest rates are going to be charged.
What? Credit scores are used whenever you want to take out a loan at a bank or credit union, when you are looking to purchase large items such as a house or car, when you want to rent a place to live, and when you apply for credit cards. Your credit score is used to give that lender an idea of how likely you are to pay your bills on time. First, we have 3-digit number. This ranges from 350 to 800. Excellent credit is between 720 and 800. Middle credit is 500 to 720. And poor credit is 500 to 350. Having a high credit score, something above 720, will increase your likelihood of getting approved for a loan and should decrease your interest rate because you have demonstrated that you aren't a risky borrower. If you have a low credit score, something below 500, you probably won't get approved for that loan. And if you do get approved, you will have to pay a higher interest rate because you are a financial risk to that institution. Long story short, your credit score is your resume to taking out loans. It demonstrates why a lender should trust you and how much they should trust you with. This is the Shelbs signing off and letting you know that having a good credit score is the cat's meow.
It's extremely important that you know what your credit score is, so you can keep track of it, know if your identity has been stolen, and so you can improve that credit score. You can get a free credit report at annualcreditreport.com once a year. That's why it says annual credit report. Get it? If you have any other questions about credit scores, feel free to hit me up at youngfreemichigan.com.
Thanks for tuning in. See you next time.
Thank you guys for watching this month's episode of the Living Young and Free show. If you found it helpful, share it with your friends. For Young and Free Maine, I'm Mallory.